Welcome back to Beyond the Balance, brought to you by TradeWinds. I'm your host, Mike Manganillo, and this is a show where we look past the spreadsheets and statements and dig into what really means to live our lives, our families, and our happiness and our purpose. Because true wealth isn't just what's in your account, it's what makes life meaningful. Today, I'm joined by someone who's been at the intersection of traditional finance, technology, and the fast-evolving world of digital assets, Matthew Snider. Matthew is an investor, advisor, entrepreneur, and founder of Block 3 Strategy Group. He's also an author of Warren Buffett in a Web3 World, a former consultant in the financial risk world, and someone who's helped both individuals and businesses understand where the future of money is heading and how to navigate it with confidence. Welcome, Matthew.
Thanks so much for having me, Mike. It's great to be here.
You are a jack of all trades there.
Yeah. Certainly a diverse group of collection of experiences, for sure.
Would love just to understand. I mean, I think a lot of our listeners are probably somewhat new into digital assets, even though it's been around for a while. What piqued your interest? How did you get into it? And I'd love to understand your background of kind of what built you into getting into this space as well.
Yeah, so Andreas Antonopoulos was a really interesting author and thought leader from the Bitcoin movement in the early teens. I would say around 2015, 2016 was when I started really getting into it and understanding that there's a brand new financial ecosystem that's being built through new rails and technology. And I found that as a finance nerd myself, pretty interesting. And it kind of culminated with actually using the tokens. I think that's something that was really a big way for people that they can open their eyes looking at digital assets, is actually creating a wallet or creating a way to store these assets and then use them. And I've trained a number of individuals and students and business leaders, and the way that I've done that successfully is through actually having them do it. So what I would do, my friend and I would go to happy hour, and one of us would buy beer with a credit card and the other would reimburse them with either Bitcoin or Ethereum or a digital asset. So it required us both to have wallets, it required us both to have accounts, and then it required us to go through the practice of actually sending and transacting without an intermediary, without permission needed from Bank of America or Zelle or some of the other financial institutions. And that decentralized way of being able to spend money with my friend really made it a compelling technology that I wanted to dive into further. And it's been 10 years.
Yeah. So you're definitely on the earlier adapter side. I guess, so I would love to understand, like, what thing or action that piqued your interest to say, this is something I really want to understand, learn, and become an expert at, right? So was there a certain person you were listening to, or podcast, or I don't even know there was podcasts 10 years ago, or video that you're like, this is something that I really want to dig into?
Well, kind of ironically, that was when I started devouring the Warren Buffett shareholder letters.
Okay.
So I was really in the 2015, this was right after I'd gone to business school, and I had a formal training in finance, but really started an interest in investing. And so I thought I would learn from somebody like Warren Buffett. I mean, everything in his letters teaches you exactly what you need to know for investing. And I kind of paired that at the same time with technology that I was using. You know, I was a consultant out at Nike. Oh, okay. And the work I did was pretty rudimentary. Like, you could come in, clock out, and leave, and it was really like you didn't have to think a lot. And not that I didn't think, but, you know.
I know you're talking about.
Yeah. And so, you know, it was fun to be able to, I would say, experiment with some of these tokens or learn about them and do research. And this was around 2017 when the big ICO, initial coin offering kind of boom came about. So there was this sort of fervent market that was really excited about digital assets. And I was pairing that with Warren Buffett's letters and like his Benjamin Graham's Intelligent Investor, and really understanding sort of this intersection between traditional investing and this new age of investing, and kind of pairing that together. But Andreas Antonopoulos is a huge influence in my perspective of understanding, particularly why Bitcoin is important. And his books, The Value or the Internet of Money, are just a collection of speeches that he wrote. There's a book called The Bitcoin Standard, which I think is really important for people who are interested in a business application. There's the Business Blockchain, which was written a number of years ago. And these are, I mean, I judge how far we've come by going to an actual bookstore. And when I first went in 2016 or 2017, there's one book there.
Yeah.
And now there's a whole section.
Yeah.
Right. So there's a lot of good resources out there now that you can read that are really compelling.
Now let's talk about your book, Warren Buffett in a Web3 world. What inspired you to write this? And then what are some takeaways you want people to kind of understand, don't give away the whole book, but understand what they take away from it?
Yeah. So Warren Buffett in a Web3 world was probably the most fun project I ever worked on with my co-author, Stephen Teplitz. And we took, or I had read 1,300 pages of Warren Buffett shareholder letters, and there's a lot of information in there, and none of it had anything to do with crypto. And a lot of people in the crypto space kept saying things like, well, how do we understand how to value a company, or how do we evaluate these tokens? And they kept coming up with all these questions that I was thinking to myself, this person has the answers, but they're not being translated in the same way because he's 90 some years old and he thinks Bitcoin is rat poison squared and like all this stuff, right? And I had just gotten my investment advisory license. I just passed my Series 65 because I kept hearing people say like, this isn't financial advice. This isn't financial advice. And I thought, well, how do I give financial advice? And as an investment advisor, as you and the team know, you carry a book of business with you and you need to provide tools for your clients. And so one of the things I wanted to do was, either create a blog or write something, but that takes a lot of time. So I thought, what's a better way to do that? And okay, let's do the undertaking of write a book. And my co-author, Stephen Teplitz, was the one that kept me kind of on the track to be able to do everything. And so it was the inspiration to just say, like, I need something tangible to be able to give to people, mostly for free, just because I want them to have it. So if anybody wants a copy, like, I'm happy to send them a copy. But it's a really good way just to spread the word in an educational way. And what we did was we took Warren Buffett's shareholder letters, or like a specific lesson from a given year that he wrote a letter, say in 1979 or 82, and we paired that with a simple, easy to understand, snackable vignette that had to do with crypto and Web3 and about how you could invest and how you should think about it. And the feedback we've gotten from people has been just tremendously positive. And the whole point was just to provide, it has a glossary of terms in there as well. So people who may not understand some of the terminology, we wanted to kind of put that in there too. And it was just a really cool way to build a tool for somebody who didn't know anything about crypto, but wanted to learn more and wanted to take that next step.
Yeah, I read it, and I think the way you outlined it, or the way it reads, is set up in a way that it's an easy to consume book. It's kind of living in this TikTok, Instagram world where you're swiping. Yeah. It's a book set up that way, where even people that fully don't understand or don't want to spend hours and hours to read this, you could read this in probably an hour, I would say. Easily digestible, easy to learn. So yes, let me know if you want that book, and we'll have Matthew send it to you. Before we go into more of the crypto space, we'd love to understand what you did at Nike. I don't think I knew this.
Yeah.
Did you meet any athletes? Were you out in Portland? What was that like?
Yeah, so I was a management consultant at Nike, and they had staff augmentation roles. So they would say, hey, we need this role filled, but we're not going to bring somebody on full time to do it. And I worked with a team that sent every marketing email for Nike for 2 years, and I assembled the audience for that using a SQL database. So we would, they had all the audience emails, the country they were from, the interest they had, when their birthday was, all this data, and we would get copy and content from the producers of the marketing materials and the emails, and we would mash that all together and create the audience that email was going to go to. And on any given day, I would send 10 to 12 or 15 emails, and they all took time to assemble. The data had to be right. It had to go through Q&A, all this stuff. But we did that. So if you got an email from Nike at any time from 2015 to 2017 because it was your birthday, or because you like golf, it was probably me who assembled that email.
Oh, that's awesome. Were you out on Nike's campus?
Yeah. So
how was it?
Campus. Oh, it was fantastic.
Was it fantastic?
And again, this was before COVID, so you had to go in the office every day. And then I did that for 2 years, and then did product management work for the Jordan team. So and Jordan is a really interesting group within Nike because it represents 10 to 12% of their full brand, and they have their own campus. They're like the cool kids on campus. They're their own micro business. And so we got to do product development work for them on the marketing side, and was in an elevator with Michael Jordan, who just happens to be there one day. The women's hockey, the women's soccer team came to play. I got to chip against Brooks Koepka.
Oh,
We stood in line. My boss and I had a meeting in line, right? A quote unquote meeting in line, and that was us. Where they would have you. They had an island out there in the pond and water, and you could chip the golf ball. And if you hit the ground, if you hit the mat, you would get to come back later in the day and chip against Brooks Koepka. And I and maybe 8 other people made it, and he was there. We chipped against him. He signed a T-shirt. Yeah,
that's awesome.
Yeah, it was.
Were
cool.
you ever starstruck? Was there anybody you met? You're like, oh my god. I mean, Michael Jordan. I couldn't even imagine.
So like, only a few people can say this. But I grew up in Hollywood, and my mom was a television writer producer. My dad was an actor. So
there you go.
I am not really starstruck by anything really. When like Denise Richards gives you like a kiss when you're like 7, and you're like, who's Denise Richards? You know, you don't like you just kind of not really paying attention. Like David Gallagher, Jonathan Taylor Thomas went to my high school. Like,
oh man,
I'm kind of just around people a lot like that as a kid. So by that time, it wasn't really all that crazy.
Was your dad in anything that we would know?
If you were a fan of MASH, my dad has a lot of scenes in MASH. He never ceases to surprise me when he talks about a movie and he said, "Did you see that movie?" And I said, "Yeah." And he goes, "Oh yeah, I was in that." He's just in the background, you know. But as he would say, he has enough time on screen to be part of the Screen Actors Guild.
Oh, there you go.
2% of the actors in Hollywood.
Yeah.
So.
And you didn't want to pursue acting?
Oh, I did.
Oh, okay.
And then my parents, said get a job, like, because they both kind of knew the challenges associated with living in Hollywood and having that be your bread and butter.
Yeah.
So that was something, and you know, candidly, the thing I'm going to try to do next, I got it set in my calendar. I'm going to do my first stand-up routine.
Oh, okay.
In January.
Do you want to test them out right now?
I'm not funny now. But like being out there on stage has always been something that I've enjoyed doing, especially too, like even in the crypto space.
Yeah.
You know, teaching people, being in front of an audience, helping them understand, learning through stories, that kind of thing has always been a real passion of mine.
Yeah. Now, this is a question of what's the right terminology, crypto or digital assets?
It's a great question. It depends, you know, if it's Thanksgiving, maybe some of us were having conversations and they ask you, you know, what do you do? Like, oh, I'm an investment advisor and I specialize in digital assets. And they go, I kind of look at you all cockeyed and you go, crypto. And they go, oh, you're one of them. Oh, okay. In my world, like I operate in that sphere all the time. We use crypto as it's definitely not a slang term. It's definitely a colloquial term or an idiom. Digital assets is much more encompassing of the broader technology and the use cases behind it. So digital assets can include everything from like a real world asset on a blockchain that may not be quote unquote crypto. So it's kind of this all encompassing term, but I would say when you're in a professional setting, digital assets is probably what bankers are going to respond to.
Yeah, I think the unfortunate crypto bro term is kind of out there, that it gets a bad rap, that even internally, I think Tim and I are the crypto bros of TradeWinds, because we've been looking at it for the last 3 to 4 years now, not like you in 10 years, but let's get into that more. We are in early December. There has been a lot of news about sell-off. Bitcoin is dropping. From your perspective, what does that really mean? What's behind the surface? Where are we? What should we be looking for? We'd love to understand the current state of it.
I think that one of the most important things for people to learn about from a crypto or digital asset perspective, I've never appreciated the word liquidity more than I do or have in the last couple of years. And what I mean by that is, you know, in this cycle of this year, we had Liberation Day, which was early on, really big cascade downturn, early Q1. And then we had about 6 months of a pretty good rally up until, you know, July, August or so. And then right in that summer doldrums, liquidity starts to leave. And because crypto is still a $3.5 trillion, $4 trillion market, it doesn't make up a lot of the total volume. So when liquidity starts to leave the ecosystem, it's going to leave risk on assets probably first. And every dollar that leaves there is a little bit more reflected from a risk or price change profile than if you're pulling money out of the S&P 500. So as the summer sort of dries up, you're going to see maybe prices dwindle down a little bit, or there won't be as much buy pressure on the way up. And over the last couple of weeks, what we've had in the interim after that was a government shutdown. And that government shutdown made it impossible for treasuries and the Fed to operate in the same way with respect to like keeping liquidity in the repo markets. So it locks a lot of things up. It makes the liquidity is the oil that makes the financial system kind of run, right? And so you've had this sort of lock in the system where there's money not flowing freely. And as a result, you're going to see dropping prices. So I feel like the last couple months have been really a matter of lower liquidity, sort of just uncertainty about where things are going to go moving into the end of the year, especially with the government shutdown. And particularly one other kind of key interesting aspect that I think when you're a portfolio manager and you have your Q2 or Q3 reports and you're up like 12 or 15% on the year, it's going to look really bad if you're, have a really bad like down quarter in Q4. So I think that there's going to be this maybe Santa Claus rally, hopefully in the next couple of weeks here, that kind of juices the system because people want to hit their numbers.
Yeah.
They've already kind of made their projections for the year and they've had a really bad kind of like Q3, early Q4. So I think there's going to be a lot of risk on moving forward. But that's kind of my thoughts and sentiment about the price.
I remember the term was a crypto winter. Do you think we're in the winter?
It's 120,000 down to 82,000, so 30% drawdown. And when you're in this all the time, and you're in it like Bitcoin at 3,000, where it's 89 or 94, whatever it is today, you kind of get immune to when it falls, abruptly like that, and just there'll be a week of just like continued selling, and the market never closes, right? So other countries will wake up, they'll see selling, and that gets propagates more selling, and it's a risk on asset. And so it means that it's going to move in a volatile way, but that volatility is your friend, because as you can see over the last week, it's actually done pretty well. So I think that there's a big upside. I think we've hit like a pretty good low, and I think we end the year higher, hopefully over 100,000 for Bitcoin.
I know the old adage was Bitcoin could be used as cash. Is that still going to be? Do you feel like that's something in the future? I know some countries are doing better than most of using it. Is that still true where we are today?
You mean in the sense that I can use Bitcoin to purchase like an everyday item?
Yeah.
Okay. So the short answer is that's not the intended use case necessarily for the Bitcoin protocol. One really good analogy is, a lot of people say like, well, you can't buy Starbucks with it, you can't do X and Y with it. Like, okay, but you also don't walk into Starbucks with bars of gold and say, I'd like to buy a latte, right? The exchange medium that people use will still be cash, or when was the last time you really used cash? It's all digits on a screen, really, and it's all a messaging system. Like Zelle at the end of the day is just a messaging system, right? Who gets what on the balance sheet, and then move the digits there, and then don't go bankrupt, have liquidity, basically. And so what's happening is you're seeing, institutions start to have more demand for these kinds of things in that same sense. So I think that there's just a lot of positive momentum in that regard.
Got it. Could you explain, I think a lot of people probably don't understand, especially in the space, blockchain technology. And I believe that underlying technology is moving the future of what Bitcoin and digital assets could be. Mm-hmm. And it's the ability to build on that is what's exciting, correct, right?
Yeah.
So what are some good case studies of what people are using blockchain for that people would like understand, like, oh, I get it now?
Yeah. So the blockchains are not new. They've been around since the late 80s, early 90s. They are essentially a very expensive database. Like the actual functionality of a blockchain is really meant to be helpful from an accounting and ledger keeping perspective. It's designed to have immutability as a feature, which means it can't be changed. It is designed to be secure, meaning that it can't be like broken into or hacked. And it's also meant to be decentralized to a certain extent, meaning that there's multiple people who operate it and can validate transactions that are happening within this ecosystem. And so the blockchain has these foundational ways that it is capable of providing value, but when it's paired with something like a token or a digital asset, it's able to, like on the Ethereum blockchain, create smart contracts or ways that you can disintermediate expensive third parties now. One really good use case would be, food and health safety, right? Like if you can start to validate food that gets brought into a grocery store, you can start to mitigate cases of people getting sick or viruses from fruits and things like that because you can guarantee where they come from. Now, you don't necessarily need a token for that. Like the blockchain doesn't require cryptocurrency, but having a cryptocurrency provides an incentive mechanism for the validators, for the operators of that currency to then move and transmit that value across all the parties. So it's important to also understand that there's like public blockchains and private blockchains. The California DMV put 50 million drivers' licenses and registrations on a particular blockchain in a private way, meaning that they own that database. It's very clearly an expensive database, but it can't be tampered with, it's secure, it can't be changed. And because of those features, they're going to use a blockchain that has a cryptocurrency associated with it so that they can power transactions or use that blockchain to their leisure. So they are able to create their own ecosystems as companies, which is really nice. But then you have the asset, which is the actual underlying token, which is sort of a byproduct in a sense of what blockchains are. And Ethereum is a great example because, and I would just encourage people to look up like smart contracts. The fact that you could execute a loan or a contract or anything from a legal perspective or a medical perspective without somebody's error coming in there, like, oh, I missed that letter, or I typed it in wrong or something like that. That contract can complete automatically, and it's one of the reasons that something like prediction markets are really, really taking off, because those are settled using smart contracts in many instances. They leverage that technology because they can't be changed and they're settled on that contract. So now you're seeing billion-dollar companies get built using an underlying technology, and then just like the internet, nobody owns the internet. They're gonna build applications on top of it, like Yelp, like Uber, like Google Maps, like all these things will come up as a result, and they'll use it as a foundational layer.
Wait, Elon doesn't own the internet? I think he thinks he does.
X will probably have a blockchain. Yeah.
All right. So since this is a Beyond the Balance podcast, what does balance look like for you in your life beyond all the digital assets in your day-to-day job? What else do you enjoy doing?
Spending time with my wife. Like this morning, we woke up at like 5 o'clock and took like a 5-mile walk around the Duke campus. Like getting out and being, working from home and working remotely is kind of tiring and cabin feverish. So it's nice to get out. I was telling you, I just bought rollerblades. I do golf as much as I possibly can, and it's a little bit tough when it's cold out now. But there's a couple indoor simulators that we could probably find. And so that's what I do, and I read a lot. I try to read a lot, try to stay focused on continuing to expand my circle of competence.
Awesome.
To a certain degree, yeah.
So other than being a comedian, what excites you most about the future between either work and new passion? Is there a next, let's just say, digital assets or cryptocurrency that you're looking at?
I grew up with the 56K modem noise. I grew up with burning CDs. Like, I understand how the internet, and I was on Napster. I was on some.
Do you remember your AOL name?
Yeah, I still have. My mom still has her AOL name. I had AIM, right? AOL Instant Messenger.
Oh, yeah.
I saw the proliferation of the internet in my home, and I recognize in my later years here what this new revolution looks like, and what this new revolution of finance looks like, and how it's going to democratize a lot of things that we have now and disintermediate a lot of expensive stuff that we don't need, and we can make things more efficient and things like that. And so I'm very excited for that world. And it's important to understand that there's a convergence of technology that's happening. It's not just blockchain and crypto. blockchain will be the foundation for where data is housed and kept and held secure that AI organizations and applications will use to power whatever products they're gonna have. That information and that data is the new oil. And so you're looking at virtual reality and AI and quantum computing and blockchain technology as a convergence of technologies that will usher us into a new era of like, and you listen to like Elon Musk. What did he say the other day? That in 20 years, work will be voluntary.
Wow.
And that's not that far away.
Yeah.
Right? There is this thesis out there that AI will get so good, artificial general intelligence will get so good and so productive, and things will dramatically drop in price that you will work because you want to work, and there will just be a universal subsidy because there will just be basically infinite wealth.
It's scary to even
Can
think
you
about.
imagine?
No.
Right.
No. I will say that in this world of, I had 2 kids, 12 and 8, and to your point of like us growing up and the noise, and I'm going to make it because it's going to kill people. They know stuff beyond what I could even do. And I think I'm pretty good when it comes to technology, but I mean, the fact that I'm tapping my 8 or 9-year-old to show me how to do stuff, or the ability that they have to purchase stuff. They don't even know what cash is, right? They got these green light cards. The stuff they're buying on, they're still playing Roblox or any of that stuff. Way above and beyond what we were doing at that age, which is great. I mean, that's the future. Yeah. And I think that's always, when I go back to digital assets, when I started getting into it 3 or 4 years ago, about the simplicity of, I don't know, it's not exactly it, but the way that they can purchase items through games. That's what they're used to doing. It's very similar analogy when you look at digital assets and cryptocurrencies and stuff like that. Like, press a button and then they have, all these Roblox now, or Xbox Bucks or stuff like that.
So there's a very popular, this is going to go down a little rabbit hole, but this is just kind of goes to show you the permissionlessness of this ecosystem. Pokemon, huge brand. In 1999, they launched their trading card game. Some guy has decided that he's going to aggregate every first edition of one single card that's just kind of like a common card. And he's gone viral for this, and everybody is trying to like send him cards. He's trying to get all of them, and people on eBay are buying them and then like reselling them at higher prices. So he launched a digital currency. He launched his own digital currency, and he has enough of a community behind him that currency moves up and down in price, and he makes money on the creator fees. And he uses that money. He's made like $100,000, and he goes and buys more of this one card using a digital asset. So now he's using a digital asset to buy a traditional asset.
Yeah,
like a Pokemon card.
Genius.
Yeah,
I didn't get my youngest son is still in the Pokemon, so I got to get him into that.
Yeah, right.
Well, this is excellent. I think this was, very insightful, engaging. Hopefully, our listeners had a huge takeaway and somewhat of understanding of how it could help them from an investment standpoint. Where can our listeners follow your work, get your book? Where can we send them?
Yeah, so it's on Amazon. Matthew Snider is my name. Warren Buffett in a Web3 World is the name of the book. And you can find me just via email at matthew@block3strategy.io.
Great. Well, thanks for coming on.
Thanks for having me, Mike.
TradeWinds LLC is an investment advisor registered under the Investment Advisors Act of 1940. The information presented in the material in general in nature and is not designed to address your investment objectives, financial situation, or practical needs. Prior to making any investment decision, you should assess or seek advice from a professional regarding whenever any particular transaction is relevant or appropriate to your individual circumstances. Although taken from reliable sources, TradeWinds cannot guarantee the accuracy of the information received from third parties. The opinions expressed herein are those of TradeWinds and may not actually come to pass.